Palantir, like many growth stocks, has been coming under pressure. PLTR is the ticker for Palantir Stock. It's down something like 40% in the last few weeks. And just earlier today, the sell side came out with a negative outlook and said, hey, you know what, the pain might keep on going with potentially 30-40% downside from here. In this video, I'm going to talk about what's the possible risk that happens. Why does some sell side analysts think that there is that downside risk? And what is my own personal take on Palantir? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies in unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Palantir. PLTR is the ticker. So recognize this is not my first video on Palantir. I previously called out how when the stock was back in the mid-20s, I might be interested in revisiting closer to a teens level. A lot of folks thought I was being too conservative. Since then, it's dropped to a teens level. This was because, you know, I had this sort of conservative outlook because their share count was much higher than most folks thought, about 30% more than most folks expected. You could check out why in that video on the overhang, and it results in, look, 30% more expensive. Now with the stock in the teens, I want to ask, okay, so what's going on? And let's look at their most recent quarterly update. On a high level, things are going well. While their total revenue grew 36% year over year, this is actually a meaningful deceleration from the 49% growth in the second quarter 21. This is part of the reason why the recent stock performance has been weak. I mean, that is quite a drop in growth. Their commercial business, however, continued to gain traction, which is needed, I'd argue, for this business to really compound in the years ahead. If you really want this to be, a company that's growing, hundreds of percent over time, to become a true compounder, you're going to need to get that commercial element as well, not just be a purely defense company. I would argue management has made some really interesting commercial bets on this angle, where they've called out how they're using their Foundry software platform. They describe Foundry effectively as a combination of the nervous and cardiovascular system for enterprises to help many day zero, not day one, day zero companies with huge ambitions. Day zero meaning effectively de minimis revenues, but lots of growth potential, lots of ambitions. Companies looking to build, for example, modern day Iron Man suits or flying taxis, saying, hey, let's take our software platform, help them integrate all this data, process it, analyze it, so that way they can launch products faster and actually come to market faster. So it's day zero, meaning they really haven't found product market fit yet, but maybe they can in the future with the help of their Foundry software. Interestingly, this is part of a portfolio of small bets that they've made worth $153 million as of the third quarter 21. I leave it to you in terms of making that call on whether or not it's a bad or a good idea to be making these types of bets. Some could argue it sort of muddies the water because now you're mixing an investment with a potential customer as well. So is it really organic demand that's driving, the desire to use their software, or is it because they're getting this investment from you in the first place? And does this create the potential that, you could be sort of overstating your revenues because you're giving them money and then they're spending that same money on the software that you effectively, the software that you provide. So it does make it a murkier picture. I leave it up to you whether or not you think it's a red flag. I mean, this follows several other interesting bets that they've made. For example, they've also bought $50 million worth of 100-ounce gold bars. Look, it's very clear that Alex Karp, the founder and CEO, has grand ambitions for Palantir, and this fits with his outlook of 30% annual revenue growth through 2025. Not very many companies have said, yeah, we think we're effectively going to more than double in the years ahead, penciling out 30% minimum effective annual growth in the years ahead. If you know any companies that have similarly stated something like that, leave a comment below. I definitely want to hear it. While 30% annualized growth is an impressive vision, management has also been selling hundreds of millions of dollars worth of stock at prices not that far above current levels. So I'd say maybe, temper that sort of optimism in terms of whether or not that 30% growth actually translates into much higher stock prices. For example, Alex Karp at the end of November sold $12 million at effectively $21 a share. So, and you've seen that he's sold literally over $100 million worth of stock in just the last few months. Okay, so you see this, you sort of juxtapose it with their grand ambitions and outlook. But why is the stock drifting lower. I'd argue a few different variables. Valuation is one, slowing growth from, as I already talked about, comparing their third quarter growth versus their second quarter, and broader macro concerns pressuring on profitable stocks. I did a whole separate video on this, called Save Yourself, on the general pressure that unprofitable companies are likely facing, especially now that the Fed has effectively changed their posturing on liquidity. You might disagree with me on this last point, though. You might say, well, wait a second. After all, management has repeatedly called out how profitable they are on an adjusted basis. Saying, look, like we have 30% adjusted operating margins, 116 million in adjusted operating income. This, unfortunately, is 100% due to stock-based compensation, which only in Dreamland isn't a very real expense. I mean, in the third quarter 21 alone, so in the third quarter alone, their stock-based compensation was $185 million. So that is the full reason why they're saying that they have a positive adjusted margin. I mean, that's a real expense. People expect to be getting paid in stock, so why shouldn't you be treating it like an expense? It in all honesty, it's a data point that I'd argue goes against management's credibility when you start doing this. And they're not alone, in fairness. A lot of Wall Street does this. I'd say the premium A investors, premium A management doesn't do this type of thing where they consistently say, oh yeah, we're immensely profitable, if you back out the fact that over 100% of this change comes from the fact that it's stock-based compensation. So I definitely, as you could tell, I don't like that aspect. So today, the stock fell on a negative outlook by an analyst at William Blair, calling out how Palantir hadn't won any mega government contracts in the recent months. When I say mega, we're talking about hundreds of millions, maybe even billion-dollar size contracts. And given their lofty valuation, which is around 30 times sales, this could result in further stock deceleration, because in order for them to continue to post significant growth in the years ahead, they're going to need to continue winning mega contracts, because government is still such a large component of their business. And so effectively the concern here by William Blair and by the folks at William Blair is that, hey, you haven't announced a, let's say, $500 million contract recently, and what we're looking at here is saying there's the real risk that your growth, let's say, decelerates closer to 30%. And if that happens, is it really appropriate for this company to be valued at 30 times sales? And so they think that Palantir stock can drop around 35% from current levels. And, I think in the short term, anything can happen. And I certainly wouldn't be surprised by a 30% or even 50% stock drop from here, which might seem, unpalatable for you, but I think it is worth reflecting that stock markets can do, really wild things. Longer term, they're tapping into several huge growth opportunities, like modernizing, the accessibility and analytics of data, which is just immense. This creates immense recurring revenue streams as Palantir effectively becomes embedded within corporations and government agencies. So, I definitely am bullish on the long-term thesis here. I'm less bullish on seeing sort of the day zero initiatives and the things like the stock-based compensation, metrics. But, given their value in terms of what they're bringing, I suspect they will be able to continue significant growth, in the years ahead. And it really is a question, if you're a big bull on Palantir, is do you think they can execute on, let's say, 35 to 40% growth in the years ahead? If you think they can do, let's say, closer to 40% growth in the years ahead, and if you think they can get to real profit margins of, let's say, 35 to 40%, that includes stock-based compensation. So if you can get real profitability, after that expense, I'd argue the stock could have 100% plus upside over the next 5 years. That's a lot of ifs, 40% growth, 40% profit margins after significant stock-based compensation, assuming, let's say, a 35 times earnings multiple 5 years from now. So there's a lot of ifs there. Look, of course, stock prices can go way higher or way lower. It all depends on execution and sentiment. So we'll see if they can deliver on this. Personally, I'm not really sold on Palantir at their current valuation, despite the sell-off. As I just called out, another software company growing faster than Palantir and trading at less than half the valuation for Palantir. So like that, when I see that in the marketplace, it definitely gets my spidey sense tingling, because I'm looking at this, I'm saying, wait a second. Palantir trades at this, around 30 times sales, 30 times this year's sales. I'm able to find other companies that are at less than half, are growing faster in the most recent quarter. And so that type of bet seems way more asymmetric versus what I'm looking at with Palantir. So overall with Palantir, I personally think, if William Blair's outlook comes to pass and the stock falls into a low teens, maybe I'll be, interested in revisiting, and I'll do another video on it at that point. But at this point, I'm not really crazy about it. If you're interested in following along with the potential multi-baggers that I call out, like that software company I just mentioned, that trading at half the valuation of Palantir, yet growing faster with, I'd argue, hundreds of percent upside versus, Palantir's, I'd sort of say more, like 100% more subdued growth potential. Go to unrivaledinvesting.com, click join the journey, and that's where I call it out for my Unrivaled Investing Journey subscribers. First week of the month, I call out my full portfolio as well. We also have a dedicated community on Discord where we're interacting. I'm personally interacting on an almost daily basis, where we're all looking to learn and share things. And so that's at unrivaledinvesting.com. If you have a strong opinion on Palantir, or you feel like I'm missing an angle, whether or not it's bullish or bearish, I definitely want to hear it, because look, I'm very interested in finding these types of companies that can grow hundreds or even thousands of percent over time. I like Palantir's long-term growth story. I'm not quite sure about the current valuation. There's a lot of assumptions that sort of go into it. And once again, like as I've called out before, I think a lot of people are sort of misreading what the current share count is in the implied valuation. A lot of folks, the calculation is just wrong. Their share count's like 30% higher than a lot of folks realize. So anywho, if this video's been helpful for you, please make a point of hitting that thumbs up button and hitting that subscribe button. Thanks so much for tuning in.